Why do you think I accepted this date? You're a sure thing.
Yes, I am.
What's my name? Say my name, bitch!
Michelle.
At no interest rate will they be willing to accept further government debt issues. And at that point, you have, as you pointed out, some kind of failure of the bond auction. We will hit that point, and that will lead to some sort of convulsion in the bond market, followed by a very big increase in inflation.
Hey guys, Raf here from the Endgame Investor, and the endgame draws closer and closer by the day. Today, I'm going to report on the near completion of a circle that I began when I was a young warthog around 2009, 2010, a few years after I got married. I got married in 2008, and we went to our little financial advisor guy, and I expressed to him certain worry, a certain concern that I have, that one day the federal government could issue a failed Treasury auction and the government could default on its debt when nobody else wanted to buy into the Ponzi scheme that is the US dollar, meaning the US has to raise new debt to pay off old debt. So the minute that the government can't raise new debt, it can't pay off its old debt and it defaults. And I was worried about this actually happening. And the guy said that, well, that would be Armageddon, and we can't even think about that. So that's not going to happen. And that's when I pulled all the money out of that financial advisor and I went on my own because, in the current fiat monetary system, if all debt is repaid, then there is no money supply because all of the money that is issued by the Federal Reserve is issued in exchange for debt. So you pay that debt off and there is no money supply. So by definition, the fiat system has to implode on itself by the nature of what the fiat currency actually is. Try to explain that to someone with a college degree and you'll get just blank stares and drool.
They flight at a stopover on the brain slug planet. He's liked it so much he decided to stay of his own free will.
He's got a brain slug on his head. Shh, you're gonna get us all assimilated.
Just act normal and switch to a garlic shampoo.
But anyway, something happened in the last few weeks that I want to share with you people because I'm a very sharing person. I love sharing. And that is when I first got into this, I started watching shows like Glenn Beck back in the 2009, 2010 era before I understood what Austrian economics was. And I was looking at the gateway drugs, and Glenn Beck was definitely one of those. He's like a buffoon, but he knows some things and he leads people in the right direction sometimes. So he had this guy on his show named Damon Vickers, but he also understands some version of the truth. And he came out with this book called When the Dollar Crashes, or the day after, or the day before, the day of the dollar crashing, or something like that. But he painted a picture where the dollar would crash by the event of a failed Treasury auction. And now that this notion that was considered unthinkable back when I went to my financial advisor over 12 years ago or something, talking about this, now the mainstream is saying that it is coming. They're not saying it's imminent, but I am saying it's imminent. I will say why I'm saying it's imminent versus they are saying it's coming within the decade. Saw this article, and I think it was a few weeks ago. We'll get to the date in a second when I scroll down. Business Insider, syndicated by Yahoo Finance up here. Treasury bond auctions may eventually fail, because investors will see federal deficits as too unsustainable. Columbia finance professor warns too unsustainable, not just, regularly unsustainable, which is all fiat currency systems. October 25th, that's like almost a month ago. I am late on this one, by Aruni Soni. So it says here, ballooning government deficits could lead to failed Treasury auctions soon, a Columbia Business School professor said. Fears about mounting U.S. debt have already worried investors, contributing to a sell-off in bonds. In a failed auction, the Fed would have to step in and buy U.S. bonds, fanning inflation. This is the key paragraph. This is how it happens. The U.S. government issues more debt, adding to already large federal deficit. Investors who are increasingly worried about mounting U.S. deficits choose to keep their money out of treasuries, and the Fed steps in to buy the unwanted bonds, and they do that by printing more money. This, in turn, could lead to higher inflation. Here's this quote. It's really not a question of what the interest rate is going to be, but at some point, people will recognize at no interest rate will they be willing to accept further government debt issues, Kalamiris said. I don't know if his name has anything to do with squid, but it might. At that point, you have some kind of failure of the bond auction. This guy wrote a research paper, position paper or something that we'll see in the next tab. But before we go to that, we're going to go into recent history. I think this happened after this article was published. And this was this was on November 9th, 2023, about 2 weeks ago. 30-year Treasury auction breaks bad.
I am the danger. I am the one who knocks. Say my name.
What's my name? Say my name, bitch!
At the auction of government debt that matures in 30 years, investors were awarded 4.769% in yield, 0.051 percentage point higher than the yield in pre-auction trading. The difference between the two yields, called a tail, indicated a weak auction where the U.S. government had to entice investors with a premium over the market to buy their debt. I will get into when my timing is after I explain what this guy's timing is, and that is in his paper that was written for the St. Louis Fed. And we have here, the title of it is Fiscal Dominance and the Return of Zero Interest Bank Reserve Requirements by Charles W. Calamiris, whose name might have something to do with squid, though I don't know. The first quote here is this from the Financial Report of the United States Government, February 16, 2023, under current policy and based on this report's assumptions. Government debt relative to GDP is projected to reach 566% by 2097. I will be, I'll probably be dead. And I don't think it's going to reach to 2097. That's not going to happen. These people are crazy. But let's go with the introduction here. When exactly will the U.S. hit the constraint of infeasibility? And how exactly will U.S. policy adjust to it? Well, it will adjust to it by hyperinflation and death of currency. But let's continue with his, I'm not even sure if this is his term. I've never heard of this term, but it sounds kind of kinky. Fiscal dominance, he said. Let's highlight that term right here with my little mouse thing. Fiscal dominance, keep that term in mind, refers to the possibility that the accumulation of government debt and continuing government deficits can produce increases in inflation that dominate central bank intentions to keep inflation low. The article begins by showing that the prospect of this occurring soon in the United States, meaning fiscal dominance, is no longer far-fetched. Indeed, if global real interest rates return tomorrow to their historical average of roughly 2%, given the existing level of U.S. government debt and large continuing projected deficits, the U.S. would likely experience an immediate fiscal dominance problem.
Let's do it. I wasn't asking.
To be specific, here's how I imagine this occurring, and I think he's right. This is the Damon Vickerization of the mainstream. So we'll say here, when the bond market begins to believe the government's interest-bearing debt is beyond the ceiling of feasibility, the government's next bond auction fails in the sense that the interest rate required by the market on the new bond offering is so high that the government withdraws the offering and turns to money printing as its alternative. And so the mainstream is now admitting that a failed Treasury auction is in the wings. We have one slide here where I title it D-Day, February to April. This chart I found on Twitter via Bloomberg and investinbest.de, apparently a German site or something. So it says the reverse repo market will be at 0 March to April 2024. QE is coming back. Current rate of decline signals Fed pivot in Q1 2024. This is the amount of reverse repos that are in the system. And we know that reverse repos are primarily the money that is being used to bid on Treasury auctions today. So Treasury auctions, the sound money camp has been baffled by the fact that the economy seems to keep hobbling along, even though interest rates are near 5%. How is this possible? If the market broke at 2% in 2018, how is it functioning at all at 5% now? And the answer is reverse repos. This is the extra money that I've said time and time again has been left over from 2020 and 2021 that was never used. It is now being used in Treasury auctions to bid on those auctions to get that yield. And once this money runs out, there will be no other dollars to bid on Treasury auctions. And that's when you will have a failed auction. So we have here the guy who put this out on Twitter made this little bracket here in this sort of shaded area that takes the trend lines upper and lower from the reverse repo dropping and projects it out to somewhere in between mid-March, April, or May, something like that. And here begins June. So let's say Most likely, according to this chart, is April, but the pace of the drawdown in reverse repos keeps accelerating. So I drew two new trend lines here in the yellow, and I took the trend line from October, the end of September until now. And we see that these funds are dropping faster and faster. Why? Because the Treasury is increasing its pace of auctions because they have bigger deficits and they have to fund more Treasury auctions. So therefore, the reverse repos are going to suck out faster, according to my estimation. So the D-Day here is between these two brackets, somewhere in February, maybe early March, something like that. Probably February, March, maybe April if things slow down in 2024. At that point, there's going to be no money to bid on these auctions, no extra money, because all the other money is being used to pay back high interest rate current debt. And the only way that more money would be drawn out of current assets into debt is that interest rates rise to the point that it encourages people to sell stocks and buy bonds. But at the point where interest rates get high enough, people stop believing that the Treasury is going to be able to pay it back at all. And then you have a total failure in Treasury auctions. And then you have the Fed buying it all, and then hyperinflation days to weeks later. So I think fiscal dominance will happen somewhere between February, March, maybe April 2024. Could be even January, but something around that time. I'm sorry for that interruption. That was the shooting range guy saying that I can now pick up my weapon after I got my license back, which was taken away from me because I dropped my daughter off at kindergarten without a vaccine pass. But that's in the past now. And so, folks, it looks like fiscal dominance is going to happen sometime between February and April 2024. And those who follow me and those who are subscribers to the Endgame Investor and those who watch this channel know that I am a fan of mining stocks. Personally, I do not own mining stocks because I want to see a certain amount of dollar profit, meaning I don't want to buy them low and sell them high, even though that's a nice thing to do. The reason that I own mining stocks is because I believe that they will be among the only companies, not the only companies, but among the only companies that will be able to pay real money dividends because they dig up money out of the ground. And when the end game hits, and when fiscal dominance hits, and when hyperinflation hits, I want to own companies that can pay me in real dividends. And those are mining stocks. The sponsors for this video at wealthresearchgroup.com have put together an exclusive report detailing exactly why and when mining stocks in general will go parabolic. I believe it will be very soon. Check out this free report for information on this topic beyond what you can get from me. Download it for free at wealthresearchgroup.com/boom. It will be in the link in the description below. And again, from my perspective, we're not talking about dollar gains because the dollar is not going to be relevant. We're talking about companies that can give you income in an environment where the dollar no longer functions. It's hard to see that today, but in a time of fiscal dominance, you'll understand. This is Rafi of the Endgame Investor, here to remind you that if you want a good deal on gold and silver, go to milesfranklin.com, call 855-GAME-END. And the weekly specials for this week are $20 Liberty coins while supplies last, only $165 over spot. There are also 2023 silver Philharmonics, only $3.40 over spot while supplies last. And finally, 2023 platinum Philharmonics, only $105 over spot while supplies last. For a place to put these coins, I would recommend a Dirty Man Safe, which you can get at dirtymansafe.com. Use the code ENDGAME10 for 10% off your Dirty Man Safe, which you bury somewhere according to your topographical map so that no one can find it and find your safe in your house. And of course, you can sign up for a 2-week free trial of the Endgame Investor at the link in the description below, or become my patron on Patreon to get what I'm saying about the Bible and what is going on in the monetary and geopolitical world today. It keeps getting wilder by the day. Javier Milei was just elected president of Argentina, of a hyperinflating currency, of a hyperinflating country. And his dog's name is Murray, named after Murray Rothbard, the Austrian economist, anarchist, anarcho-capitalist. It looks like the world is at a tipping point, and the good guys are finally starting to gain some ground. Good luck with your fiscal dominance.
Oh my God, she used me. I was used. I was used. Cool.